Let's look at the basic trade setup. And the trade setup, I think, Dipan, one needs to be cognizant of the fact that even though the global yields have gone higher, US yields have gone higher, the dollar index is well under control, currency is well under control. So can one say that as long as the dollar index remains weak and currency remains strong, which is Indian currency, we should not worry about FI activity?
I think FI generally are realizing the superior fundamentals of the Indian economy, and they are seeing that in US the fundamentals and the corporate profitability are seem to be a bit challenged, and there's just too much concentration in the Magnificent Seven. So from that point of view, I think all emerging markets are doing well, and India is getting benefits of that as well. So I'm not that much looking at the global factors at this point of time, but really, Nikunj, the real important event over here is what's going to happen, in July when the 90-day period gets over, and what is going to be the Trump tariffs. That's the most important question, and frankly, the real risk factor in this nascent uptick which we have seen in stock prices. But nonetheless, I think the long-term flows of the FI seem to certainly have improved.
Okay. Uh, Dipan, if you have to pick up spots based on earnings, where are you finding a sense that a 15-18% growth looks conceivable for next 2-3 quarters? Where are you getting that confidence? In which name, in which sector, in which theme now?
It's a difficult sector, but I think specialty chemicals, a lot of companies did very well in this particular quarter. It is a cyclical business to some extent, and I see an upcycle in the specialty chemicals business. These companies invested heavily just around 2020, around the COVID times. They came into the limelight because of China Plus One strategy and generally cyclical upcycle. And they were all expanded capacity significantly and expanded their footprint in the global market. A lot of them have got long-term supply contracts as well. And now I think since input prices have stabilized and even the final prices have improved a little bit, I think these companies are doing well on the volume front and the price front. So within the entire space now, we are looking at specialty chemicals very closely to see if there are any good winners over there. Right now, on an optical basis, these stocks look expensive because last few quarters, the earnings have been a bit disappointing. They have been negative for many of the specialty chemical companies, but these are great operating leverages. And at some point of time, the earnings can surprise us on the upside. And from that point of view, these stocks seem to be a bit undervalued. But Nikunj, this is a very complex sector, difficult to understand, and there could be a great degree of diversity in the terms of the earnings which come through. So we need to be very careful which stocks we buy into. But if you ask me one sector which is looking promising after this earnings season, I have to say it's specialty chemicals.
Well, specialty chemicals is the way to go. But look at technology as well. While you may not have had a meaningful move yet, but the Infosys ADR overnight saw a jump of about almost 2 odd percent or so. Dipan, is IT a contra call by any chance?
No, IT has now gone off the radar completely. And we've gone over this thing many times. The real reason here is that they have clearly, I think, they have lost their moat. What is happening is with the kind of surge in GCCs, global capability centers, really the competitive edge of the IT software services companies has got eroded. Their clients themselves are going ahead and setting up captive software development centers themselves. So what is really the value add of a software services company? That's, I think, is being questioned. Secondly, whatever happens, it's very clear that US economy is going to be stressed for the next few quarters. Recession, depression, crash, one doesn't know, but definitely there's a great deal of uncertainty amongst US corporations. And in that kind of a scenario, they're not going to go ahead and increase their expenditure on software. So that's going to be a bit of a challenge for software service companies. And then there's this AI thing. I thought this AI was going to be a great opportunity for Indian software service companies, but it doesn't seem to be so. And a lot of those projects are very small and really not percolating down to the software services companies. So for me, the entire sector is a avoid, except for 2 or 3 outliers. You could say like a Persistent Systems, which has done exceptionally well. Maybe an Oracle, which is more of a product company. Newgen, but disappointed with Newgen's numbers. which is kind of a platform company. So there are just one or two picks here or there. But by and large, I think the traditional software services companies are a complete avoid.